friends, in this video we'll work out some more problems related to final accounts of banking company. So this is the problem. From the following information, prepare profit and loss account of General Bank Limited as on 31st/3/2017. So we have the information: interest on loan 34,90,000, office expenses 15,50,000, interest on fixed assets 36,50,000, interest on overdrafts 12,80,000, rent and rates 1,80,000. So you know the schedules for which they belongs. For example, interest on loan, it is schedule number 13. Next, office expenses, operating expenses, schedule number 16. Then interest on fixed deposits, so this is the interest which has to be given, so interest expended it is. Interest on overdraft, so this is an income, so schedule 13. Rent and taxes, this is operating expenses. Commission charge to customers, this is other income, schedule number 14. Rebate on bills discounted, so this has to be added to the current year's income. So then bills and purchases and bills discounted, this is not an item this of profit and loss account. This goes to schedule number 9, advances. Interest on cash credit, again belongs to schedule number 13. Then amount charged against current accounts, so this is again income, so other income it is. Directors remuneration, operating expenses. Interest on SB accounts, so schedule number 14, interest expended. Postal expenses, operating expenses. Printing and stationery and other expenses are the other expenses. So rebate on bills discounted, it is 5,20,000, so this has to be deducted and this has to be added to the current income, so that we will get the actual interest, or schedule number 13 complete. So here provide for taxation 50% of the profit, so current year's profit, from that 50% is to be deducted in the form of, look at the schedule. So here we have added all the interest, different types of interest, and from that, for that we have added the rebate on bills discounted at the beginning of the year. Then we have deducted the actual dividend paid, rebate on the bills discounted of the current year, so that hence we got a interest earned 69,70,000. Schedule number 14, other income. So here we have commission charged to customers 94,000 and amount charged against current account, it is 1,20,000, so total 2,14,000. Next, schedule number 15, so interest expended. So here we have interest on fixed deposits and interest on SB account, so total 43,40,000. To schedule number 16, the last one. So here these are the expenses: office expenses, rent and taxes, directors remuneration, postal expenses, printing and stationery and other expenses. So total operating expenses 18,44,000. So then we will prepare the profit and loss. So this is the profit and loss account. So look at here, we have simply copied them from there. So interest earned 60,97,000, then schedule number 14, other income 2,14,000, so total income is 63,11,000. Similarly, expenditure, so in that schedule number 14, interest expended, so 43,40,000 and 18,44,000. So then after deducting these two items from the total income 63,11,000, we got the whatever balance you are getting, so that is multiplied by 50%, it is 63,500. So here it is 1,27,000. We get a balance of 1,27,000 and half of that is 63,500. So that is going to become a provision for taxation. So since there is no information about provision for bad and doubtful debt, we have written nil here. So total now after adding the provision for taxation as one of the expenses, so we got a total expenses of 60,47,500. Now from 63,11,000, if you deduct the expenses of 62,47,500, we will get the net profit of the current year, so that is 63,500. So last year's profit is not given, so therefore it is nil. So therefore the total profit is 63,500. So now appropriations, as we all know, like 20% compulsorily transferred to the reserve, statutory reserve, so that is transferred here 12,700, and remaining profit out of 63,500 is 12,000, 63,500 is 50,800, so therefore the total profit is 63,500. So this goes to balance sheet, and even this goes to the balance sheet, but it is going to be added to the reserves and surplus and the statutory reserve. Okay, so even there the last item of schedule number 2 is balance transfer from profit and loss account. Now let us discuss one more problem. So here this is a problem. So we are supposed to prepare the balance sheet of Lakshmi Metal. So share capital, that is schedule number 1. So premises, schedule number fixed assets, so schedule number 10. So then rebate on bills, so this is a current liability. Then travelers checks is a current liability, so bills payabilities. Then deposits, so this goes to the deposits, this one schedule, that is schedule number 3. Money at call and short notice, schedule number 7, balance with other banks and money at call and short notice. Then profit and loss account, that is the current year's profit, so that should be added to the first reserves and surplus, schedule number 2. Then investments, so schedule number 8. Then bills purchased is schedule advances, that is schedule number 9. And acceptance for customers, this is a contingent liability. Then loans are going to be treated as the advances, that is schedule number 6 actually. Then reserves, so schedule number 2. Then depreciation fund is going to be treated as one of the this depreciation fund is to be deducted from the premises, that is 1 lakh. So net amount is 90,000. You have to write it in the outer column. So depreciation fund is the accumulated amount of depreciation of the premises. So here we have to assume that this is the book value from which you have to deduct the depreciation. And cash in hand, bank and with the Reserve Bank of India. So here this has to be like and in hand rupees 30,000, and with RBI 5,20,000 goes to schedule number 1, and with other banks it is 4,50,000. So that is in schedule number 2. Then pension fund, other liability, current liability. Then bills for collection, this is again an intangible, comes under contingent liability. Up to the contingent liability, the last part, without schedule, there is an item that is called as bills for collection. So in addition to that, there are 2 adjustments. Traveler's check paid 10,000. So this has 2 impact. One is like traveler's check, when we write it in the liability side, other liabilities, from there, from 2 lakh it has to be deducted. How much you deduct? 10,000. Okay, similarly when we write cash in hand of rupees 30,000, from there we have to deduct 10,000. Cash is paid. Similarly, traveler's check liability has come down by 10,000, and asset has come down by, cash has come down by rupees 10,000. Similarly, money at call, recovered in the sense like you had lent a loan of rupees, somewhere here it is money at call and short notice. You had lent 9 lakh, but out of that 20,000 is recovered. 20,000 is recovered means from this you have to deduct that. And meanwhile, one of the assets is coming down, and meanwhile you get the cash in hand is going to increase by 20,000. So this is the adjustment. So now look at the balance sheet formats. So I think I have explained all of them. So the reserve fund, from the current year's profit, it is given in the problem 45,000. 20% is to be transferred to the reserve, 9,000. Remaining profit from 45,000 minus 9,000, 36,000. So total reserves and surplus 3,45,000. So this is compulsory. Even if it is not mentioned in the problem, you have to transfer 20% to the statutory reserve. Comes is the deposit. So here deposit 56,000. There is no other information. Borrowings nil. Then other liabilities and provisions. See, look at here. Traveler's check. I had already explained it. 22 lakh. But traveler's check paid is 10,000. So this liability has come down by 10,000. So 1,90,000. Then pension fund, one more liability, and one more is rebate on bills. It is 5,000. So total 2,35,000. Next comes is schedule number 6. Cash in hand 30,000. Money at call recovered 20,000 we have added. Total 50,000 minus traveler's check paid 10,000. Net amount 40,000. Then balance with the Reserve Bank of India 5,20,000. So total it is 5,60,000. Balance with the banks money call and short notice. So balance money at call and short notice 9 lakh. minus money at call recovered 20,000. See, here we have added here and here it is deducted. Both are in the asset side only. So net impact is 0 on the accounting equation. So 8,80,000. Then balance with the other banks. So 4,50,000. So total of schedule number 7 is 13,50,000. Then investment. So there is only one information. So that is like investments. So 7 lakh. Okay, fine. So schedule number 8 is over. Now we'll move on to. So schedule number 9, loans, cash credit and overdraft total 22 lakh. Then bills purchased and discounted 15 lakh. So here it is, total it is 37 lakh. Then premises, as I mentioned earlier, 1 lakh is the gross amount minus depreciation fund 10,000. So total is 90,000. Then other assets. So here other assets we have nil. Therefore we'll move on to the 12th schedule, contingent liability is acceptance for customers. I have already mentioned over there 5 lakh. So that is 5 lakh. Now let us prepare the balance sheet. Look at here, schedule number 1 2 lakh, schedule number 2 3 lakh 45,000, schedule number 3 56 lakh, schedule number 4 0, other liabilities and provisions 2 lakh 35,000. Hence we got a total of 63 lakh 80,000. Then we will move on to schedule number 6, so that is asset side. So cash and balance with the Reserve Bank of India 5,60,000. Then balance with the banks and money at call 13,30,000. Then investment, the 8 schedule 7 lakh, advance schedule number 9 37 lakh, fixed assets schedule number 10 90,000. Then other assets nil. So total it is 63 lakh 80,000. And contingent liability 5 lakh. And there is, I already mentioned there, so bills for collection without schedule it is 4 lakh. Okay, so with this I think the problems are clear. So this kind of problems you can expect in the examination. As I saw in the question papers, you would be asked to prepare either profit and loss account or balance sheet, but there are chances that you would be asked to prepare both to profit and loss account and balance sheet. Very simple, just remember the schedules 1 to 16. Then you should know what are the contents, what are the items comes under each schedules. And once if it is clear, then it's very simple. Once if you complete all the schedules, you can directly transfer them into the balance sheet and see through that your balance sheet got tallied. That means asset total should be equal to liabilities total. Thank you.